So a recession and high unemployment is actually going to make a bad inflation problem worse. And the markets just don't understand that. That's why the 30-year bond is still yielding, 3.6, 3.7%. People don't realize that inflation is more likely to be 10 or 15% or 20% for the next 30 years. The people who are buying these U.S. Treasuries are going to get wiped out. They're not going to get even close to compensated for their loss with a 3.7% yield. You see, there's only two things that could possibly happen to holders of U.S. Treasuries. The government defaults and doesn't pay you, or the government wipes you out with inflation, and so the debt is repudiated through inflation. Those are the only two options. Option A is not very likely because the government doesn't have the integrity for an honest default, so they're going to go with option B. They're going to repudiate their obligations through inflation. And when the markets figure this out, the bonds are going to get killed. So before I go and grab your questions, which is the other point of doing this, because I'm getting a lot of emails and people are asking me a lot of questions. Look, is it possible that this is a head fake? Could the Fed come out tomorrow and throw cold water on the idea that they're thinking about not hiking, or that the next hike is the last hike? They could. They could try that. They could say, no, we don't care if we have a Lehman Brothers bankrupt. We don't care how many banks go under. We don't care if we go to depression. As long as inflation is still above 2%, we're going to keep on fighting it. Yeah, they can do that. Now, will they do it when push comes to shove? No, of course they won't do it. But, they want to keep on talking about it, right? I mean, they want to keep talking about, the house they have in the Hamptons and name their ponies. And while they're driving there, if you don't get the Seinfeld reference, yeah, they can take it to its extreme and just pretend that, they're going and they got that house. But I don't think so. I think once the markets really start to lead the Fed in a particular direction, I think that's where the Fed is going to go. I mean, I think the Fed likes to follow the markets. The elections are coming up. The midterms are coming up in November. We're getting close to November. So they don't want the market imploding. I don't think the Fed is going to try to walk this back. I think the Fed might be happy that this is happening. In fact, I pointed out on my podcast, several FOMC members started to backtrack. They started saying, maybe we've gone a little bit too fast, a little bit too far. Of course, they haven't gone far enough. They were too slow. That's the problem. And remember, the problem isn't the rate hikes. That's not the problem. The problem is all the rate cuts in the past, and not just since COVID, all the way back to 2002. The Fed has maintained this policy of artificially low interest rates for 20 years. That is the problem. Raising interest rates now just exposes the problem. And now that the problem is being exposed, people want to shove it back under the rug. Well, it's not going to work. So my point of this is forget about it. Even if the markets go against us again, who cares? Right? You got to understand the big picture here and where we're headed. And as far as I'm concerned, people should be all in on this trade, on this anti-dollar, despite this head fake rally. You're betting on inflation. You're betting against the Federal Reserve. They always say, don't fight the Fed. Well, I'm not actually fighting the Fed. I am betting that the Federal Reserve continues to make mistakes in the future the way it's made them in the past, and that it will continue to take the expedient way out and do whatever it can to postpone a crisis. And therefore, it is going to do what it did after COVID. It's going to do what it did after the 2008 financial crisis, even though this one is much worse. So you just got to go all in on this trade and get into real inflation hedges, get into these foreign stocks, get into the mining stocks, get into precious metals, get out of the dollar, out of U.S. bonds, and tune out a lot of this noise. And don't wait until you get an engraved invitation for the Fed. You can't be one of those guys, well, I'm going to sit back and I'm going to wait until the Fed tells me exactly that I can't lose. Yes, I'm going to wait for the Fed to cut rates and launch QE5, and then I'm going to sell my dollars. Then I'm going to buy some gold. Yeah, you and everybody else. See, the thing is, you've got to act before the crowd. You've got to have enough sense to anticipate what other people are going to do in the future, and then you do it now. That's how you make money. I am watching the price of gold now live, moving further above the 1700 level. We're at 1702.30, and silver is inching up as well. at $20.76. And if this really is the beginning of the turn, we're going to see some much bigger up days in gold and silver than what we just saw, because a $40 move is really nothing compared to where we're going. Because if people got this now, if they're starting to figure it out, gold is going way up. When they actually figure it out, it's going much higher. No, later tonight, I'm doing an interview on CNBC Asia. It's been a long time since I've been on any of these CNBCs. I doubt I'm going to ever be on CNBC USA. In fact, I don't want to be on that network. But the Asia ones are, they're a little bit different. So I'm going to do that one. But I'm doing a bull to bear debate about gold. And the host sent me a question. Well, how high is the price of gold going to go in the next year? I said, I don't know. Gold can go up $200 an ounce. It can go up $2,000 an ounce. It can go up a lot more than that. I don't know for sure. I just know there is massive upside in the price of gold, because gold is priced for the Fed winning the inflation fight. When gold has to be repriced for the Fed losing, the actual price of gold is many multiples of its current value, because that has major implication when it's inflation forever. We are living in an environment where we will have double-digit inflation every year in perpetuity for as far as the eye can see, unless it turns into hyperinflation, which will be even worse. So, all right, here's the first question. Thoughts on gold vaulting services like Kinesis? It can be used to spend vaulted gold via debit card and get physical. I'm not a sponsor, by the way. Yeah, I know quite a bit about Kinesis. I have been researching a lot of these companies because, my bank blew up, and I'm not really talking about that yet because I'm in the middle of litigation still on that. And so the lawyers say, hey, don't really talk about everything. And so a lot of people are probably curious what's going on there. And believe me, I got a massive story to tell on what happened there. But right now I'm kind of, keeping it, on the down low while a lot of this legal stuff. And there's probably going to be more lawsuits that I'm going to file. So who knows? I could be in litigation for years with other lawsuits. Not me getting sued, me suing. Right? Because all the bad stuff was done to me. I didn't do anything bad, but I had a lot of bad stuff done to me by a lot of people. But so I've been looking at a lot of companies, to be honest, that are doing. In fact, from what I can tell, I think they have so far the most robust platform I've looked at relative to some of the other people I'm talking to. They're kind of got a head start on where they are. But the whole idea behind what Kinesis is doing and what I was trying to do and what several other companies are doing is tokenizing gold. I mean, all these guys that are in Bitcoin, right, they're going to get wiped out